Joining us now, Quincy Krosby from Prudential Financial. Steve Grasso is here from Stuart, Frankel, and Jack Bouroudjian from UCX. So, Quincy, what do you think about the market taking this glass half full approach to trade?
Well, I think the market gets bored with the same headline. So the market was able to discount what they already knew, and that was the first tranche of the tariffs were going to be imposed. There was no chatter out of Washington that suggested otherwise. The market absorbed that. Money went into areas in which they were still safe. And I think that the market is basically looking at it and saying, well, when we get new information, we'll move accordingly. So, I mean, that's the market's job, to discount what it knows. If there were more talk about more tariffs, deeper tariffs beyond the second tranche that we expect in August, I think the market is going to get nervous and the market will probably have a catalyst to pull back. But again, the market just absorbs what it knows. That's, again, the market's job, and that's what we're seeing. And the trade talk has now moved into the back burner, and we're in the earnings season. We're hoping that becomes the main focus for the market. Then things should be fairly stable.
Steve, banks and industrials really leading the charge today. What do you make of that, and can it be sustained?
Sure. So industrials, you're going to see that risk-on trade coming back on. So to Quincy's point, we had a lack of trade, negative headlines over the weekend, negative headlines today, this morning. So you're going to see that risk-on trade, the industrials rally, and the banks now. The banks have been oversold. You and I have talked about this on air. The XLF has been on oversold at a historic level into basically the CCAR, where everyone thought that was going to be a catalyst to the upside. We did see a little bit of a pop on banks returning more money, but now we have earnings coming on at the forefront at the end of the week. 25% of the XLF will report pre-market on Friday. You better cover your shorts if you're still betting against the banks.
We are expecting good earnings, right?
Well, we're expecting good earnings, but I think probably slightly tougher this quarter than last quarter when they had the first effects of tax reform and things like that to come through. Jack, in terms of what we've seen in the rates today, but particularly the dollar, is that what we'd expect? I guess there's some other factors like UK-specific factors that are affecting things more than just the dollar side today.
Well, there are a couple of things. One, of course, is the fact that I think people are starting to understand something that we have all known here for a while, and that is New Yorkers could be as subtle as a sledgehammer. And basically, this is sledgehammer diplomacy. And, you know, basically, we're digesting it all. It's being factored in. It's being discounted in. But, you know, going back to what your question was about the dollar, one thing to keep in mind, you know, over the course of the first quarter of the year, we saw over $300 billion repatriated. This has been putting upward pressure on the dollar. Now, if that's just a quarter, imagine what's going to happen through the rest of the year. We're going to see upside pressure, which is probably going to keep the hands of the Fed tied, and that in itself is a problem. But something that happened a couple of days ago is even more important, and the only person who hit on it today was Bob Pisani, God bless his soul, all right? And that is the fact that all four of the nominees for the Supreme Court are business friendly. It does not matter which one of the four ends up getting nominated. If any one of those four is the next Supreme Court justice, what happens is there are 5 justices that are business friendly. That is a huge boost for the market.
Do you agree, Quincy?
Well, absolutely.
Can you make that jump?
Yeah, no, absolutely. I mean, first of all, most of the Republican candidates are from the Republican Party that are put forth are probably business conservatives, and they are going to be friendly to business. We've already started to see that on the court decisions over the last couple of months. They are business friendly. So as far as the market is concerned, that is a major plus.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.